Welcome back to our discussion on investing in exchange-traded funds. Joining us again is our ETF expert, Yves Robertet, who will now share his thoughts with us. Yves, so you've been listening to what our guests have to say today. Considering that the marketplace is getting quite crowded nowadays, what sort of challenges would they be facing?
Thank you, Andra. Good question. The number of ETFs, as you pointed out, has risen exponentially in recent years. So I guess the question for Howard and Michael in particular would be, in terms of challenges, how do you differentiate your product lineup and how do you get your message across to end investors as far as the use and applicability of your methodology or your product in their portfolios?
Well, I can start, and we have a wide range of 80 ETFs, as I mentioned before, and we look at them in sort of three segments. We have low-cost index trackers, we have an actively managed family, and then we have a leveraged and inverse family. So those are really unique in the Canadian marketplace. But I would counter and say choice is good for Canadian investors. The more tools you have in your toolbox, the better portfolios you can construct, and the better you can do in all types of market conditions, and that's what we believe in.
Well, I think you're right, Yves, that you have to differentiate yourself somehow. Cost is one way to do it, and we're seeing providers in the marketplace that are competing almost exclusively on that basis because they cannot otherwise differentiate their product lines. A long time ago, Invesco PowerShares made the decision to try and add value in terms of that intelligent index construction, which is not a departure from what you and I would expect in an ETF structure, the low cost, the transparency, et cetera. But is there a way to improve the risk-adjusted returns to the investor? Because ultimately, that's why we're using exchange-traded funds for investment. Mm-hmm. So if we can demonstrate to the marketplace, and I think you're starting to see that increasingly as some of the more innovative and recently launched exchange-traded funds garner live track records that deliver the proof points that, yes, in fact, there is a way to create an alternative index structure that is designed to outperform a more traditional index structure. But the question is very broad. And it really boils down to what market or asset class are we talking about, where cost may be a very important consideration. In other respects, liquidity or investability is an important consideration. And then investment merit may at some place enter the conversation. I think the marketplace and providers in particular are responsible, though, to provide sufficient transparency and education on the usage of ETFs in general, but more specifically how their products can have application with investors.
And John, for you specifically as an investor, you may not have the strategies, but what would you be looking for in, with the hindsight that, for say, Vanguard, huge companies coming to town and now trading here? So,
well, I'm looking forward to Vanguard coming here simply because they do come in as a low fee company. Right. Because I think some of the MERs on the ETFs are getting a little bit out of range, right. And so I think there's room for competition. The other side of the coin, of course, is that just because an ETF provider comes out with a new asset class, it's great to have the choice, but it doesn't mean you have to have it. Right. And I've had a number of requests for a water ETF. Why? So what I try to do is keep my portfolio simple. If it's a smaller mid-range portfolio, maybe have 8 to 10 ETFs, including income ETFs. Larger portfolios will have 15, because you don't want it to look like a mutual fund portfolio where there's 30 or 40 funds and you have no idea what any of them are doing. I want my clients to be able to look at VNN and, after 30 seconds know roughly where their portfolio is.
Okay. And Yves, has any particular company said something that you may be in agreement with or disagreement with? Has anything sparked at all?
I think one of the things that John has said is probably one of the elements that investors need to be the most aware of, and that is they need to understand specifically what product they choose from what provider and for what end purpose. And to Howard's point, I totally agree with you that the more product, the better in the sense of being able to meet investors' needs. Now, with regards to how to build a portfolio, perhaps that would be a good question for John, but certainly I buy into the notion that you can develop better ETFs, you can develop better methodologies, or you can look to giving investors some choices in terms of methodologies and leaving it to them to figure out whether they essentially connect better with that methodology, or whether that particular methodology is something they approve of in terms of dealing with specific elements of the marketplace. But perhaps a good question in terms of the broad ETF space in Canada and looking across borders to ask in terms of individual investors, given the concerns that arise in some other jurisdiction, is ETF is a very popular space right now, but that hasn't protected it entirely from generating negative headlines. Notably, Europe being in the kind of crisis that it's in, we've had questions relative to swap-based ETF. And Howard, you're delivering here in Canada the lowest cost ETF, and you mentioned the word swap. So how is a Canadian investor not concerned with that?
Right. Well, they should be, and it comes back to knowing what you own and what's inside the ETF. But we're very fortunate in this country that the regulations that we have cover all of these issues, and it doesn't always happen in other jurisdictions. And today, with information flowing, in real time everywhere, you can get something on the internet, you're not really even sure where it's from. But for Canadian investors, what's important is in Canada, the rules that govern swap-based ETFs, to answer your question, are very definitive. You've got a maximum of 10% exposure per counterparty. We just use one counterparty. They must maintain a minimum credit rating, and the collateral that's used in this arrangement is cash, total cash. So those are some of the issues that have plagued other jurisdictions that Canadian investors don't have to worry about.
And Eve, you may have some input in this, but I will ask the panel, is there any ETF company that is missing from the panel today that you would have liked to see on the show or have here?
Well, I would certainly, as the end user, would certainly look at Bank of Montreal and Claymore. But just to follow up on what Howard was saying, though, and I was looking at Howard's site the other day, and they have a really excellent section there, 25 questions that an advisor should ask about ETFs. And it's really very good, and any investor should look at that too. And with respect to the swap component, that was a concern I had too. And as Howard knows, I grilled a few of the people at Horizon Beta Pro about it.
We passed the test?
Yeah, you passed the test.
Excellent.
I bought the product.
Just-
And, but also, they put me through to the people who are actually doing the swap mechanism
Right.
so that I could become familiar with it. And so, yeah, it passed the test, and I'm fine with it. And National Bank is the main counterparty, and they're listed as being the strongest bank in Canada.
And I
So.
think
And that
Eve, I
fund's
want to
been-
add to that just quickly, if I may, just because you're right. The industry is evolving and innovation is evolving, and now you have these swap-based investments underneath an ETF, synthetic structures, all of which, though, are designed in the end to add value for the client, either in terms of the cost of investment or the efficiency of tracking the underlying index or basket. So they're designed with the investor's best intentions in mind. I think what we have to differentiate between is the uncertainty we see in the broader financial markets right now and the potential impact they can have on exchange-traded funds. I think it's very different from a discussion on whether, in fact, the structure of exchange-traded products is flawed, because I believe strongly that it's not. But there are larger events unfolding in financial markets, the speed at which the global economy is evolving and unfolding, the speed at which information is being discounted in the economy and the marketplace through institutional investment now, electronic trading, all of which can have a bearing on exchange-traded products. But I think they're fundamentally very sound in their structure.
Yeah, and add proof to that statement, the fund that we're talking about, HXT, investors on an after-cost, after-tax basis over the last year are ahead over half a percentage point over an alternative. Doesn't sound like a lot on the surface, but you compound that out year in and year out, it's going to add up to significant larger portfolios for investors over time.
Well, there's lots of choice in the marketplace, as we've discussed, which I think is a good thing for the end investor, for the investment professional. It just requires a little bit more homework to ensure that you understand the methodology, you understand the intended investment objective of the underlying investment.
Yes.
How much does it cost? Is it liquid? And I think once you can satisfy those criteria in a unique circumstance, perhaps where John's looking at an individual client scenario, or more generally, what is a good fit in the investor's portfolio, the choices are a good thing, and I think it's only going to continue to, we're going to see more innovation, more evolution in the exchange-traded fund space in Canada.
Yeah, this is a fairly young industry.
Yes.
In fact, we just formed the Canadian ETF Association, and it will act as educational, one voice, and look for policy issues as well that are relevant to all of our providers. And so for investors tuning into programs like this,
Right.
learn more about ETFs, all of the providers have excellent websites with information. There's knowledgeable advisors like John out there and industry experts like Eve, and just learn as much as you can, because you can end up with better portfolio results
Right.
using ETFs.
Those are excellent
And
points.
also there are a couple of other ETF providers. Bank of Montreal, they have some very interesting products out there, particularly on the income side. Claymore and, of course, in PowerShares have a similar approach in terms of RAFI, and that's the Research Associates Fundamental Indexing, which is the added value approach. So lots of products, good choices, and good players.
I want to thank our guests for joining us today. Thank you, gentlemen, for taking the time.
Thank you.
Thank you.
And that's our show. So you've heard what they have to say. Now the rest is up to you. To learn more about each of the companies profiled today, visit their websites, or you can speak with your certified financial advisor and get all the facts before you invest. And join us next week when we will introduce you to 3 more publicly traded companies that you can invest in and who might just be the next biggest winner. Until then, I'm Andra Anescu. Good night.